Welcome to Real Vision's How I Got My Start in Finance. This week, Dave Collum, professor of chemistry and chemical biology at Cornell University, talks with Tony Greer about his unusual entrance into the world of finance.
When I started as a kid, I was thinking of going to Wall Street, and then I got diverted. I was kind of a science guy, and I went to ag school, was going to go to vet school, and then med school, and then ended up going to grad school in chemistry. But my dad taught me a lot. We had some amazing conversations that stuck. And I think it was around 1993, all of a sudden, it just kind of clicked that I should pay more attention. I was one of the boomers who started to realize that I had a decent amount of accumulated wealth, and I started getting interested, and we're in the middle of a mania, right?
Yeah.
And so it looked like that money was just growing on trees, and so it got interesting. And there was this one guy who sort of fostered it because he was a traveling salesman for Merck. And he would take all the CEOs of every company, visit it out and talk stocks. And by the time he was done with the cycle, he could tell you stuff about stocks that you really almost shouldn't be knowing about, right?
Wow.
So
it's the
got some
stories.
great early tips, made a fortune off them,
Right.
and then started paying attention.
Wow, that's really, really cool. And then we walked right into the dot-com bubble, the beginning of it, so you had a chance to invest and
Right.
potentially make some money there, although I don't know if that would be your cup of tea.
Well, it was actually. I was a raging bull.
Oh, great.
I thought, I talked to my dad, say this is transformational. And then somewhere in the ballpark of mid-98, I started to get really creeped out. And I had conversations with my father, and I said, Dad, I'm a little nervous about these markets. And he was kind of non-committal. And then at one point I said to him, I also fear of missing out, the famous FOMO line, right?
Yeah.
And he stopped me and he goes, that's greedy. And I thought about it, and I not long after that, I actually liquidated half of my mutual funds, and that was in July of '98, and then the market tanked almost to the day, right? That was just luck. And I said, if it comes back, I'm going to get rid of the rest because this is nuts. And so it came back, and by mid-99, I was selling everything.
Wow.
So I owned Dell, I owned WorldCom. I made 7 fold off WorldCom and got out, right? That was a good one.
Yeah. That explains the financial.
Pure Luck, Dell, Minimed, Warner Lambert. There was just some great companies. And one year I had a 90% year, right? How do you not get addicted to those kind of returns, right? But I sold, and then all of a sudden I was the only guy, a few people who I was picking up information from the sort of the very beginnings of the internet chatting world. Like I think probably something like Fleckenstein.
Oh yeah.
Right? And
sure.
And so by mid-99, I'd exited the market 100%. I didn't own a share of anything. And I actually bought gold. I bought it through Central Fund of Canada. And I had to wait 2 years for it to bottom. And I kept buying it. And the NASDAQ was going up and the gold was going down. And I was white knuckling it pretty good.
Yeah.
And then it turned.
Yeah.
I also shorted the market at that point. And I've only done that twice. I will never do it again probably because I now know how stupid I was.
Right.
But I made about a 30% on that short too, just out of dumb beginner's luck. And then around 01, I started thinking I got to hedge inflation. The inflation that never showed up, right? I actually think it did, but it didn't show up in the way that everyone thought it would. It wasn't a raging inflation. I started buying energy, and I actually was interested in the commodities. I couldn't find a way to do it, right? Note to self, I was a stamp collector. When you couldn't find a stamp that didn't cost much, you go, that's the one you want to find, right?
Yeah.
I once bought a stamp as a kid. I had to send to New York City to get it. I made 20-fold buying that stamp.
Wow.
So in any event, I started trying to buy commodities. I actually spent some time talking to Jimmy Rogers' partner, a guy named Clyde Harrison, I think it was, on the Rogers commodity fund. I didn't like it. Something smelled wrong to me. There's too many derivatives in it. And so I just started, and I thought, and then I was lit up because if there's no way to do it, then there's certainly not a mania, right? And so I started buying energy equities just through Fidelity. I picked 6 materials type energy things and started buying them. So I caught the energy run from sort of 01 all the way up to when did it cease? So I don't know. I blocked that out of my mind now. Somewhere around 13 or something before it got the tar beat out of it.
Yeah. Yeah.
So in a nutshell, I was 100% bonds from 80 to 87. The crash caused me to ponder what equities were about. And I had a white-haired old guy say, Dave, equities are a good investment. You should consider it. And so I started going aggressive equities after the '87 crash. It woke me up to them.
Wow.
And then I was in equities till '99, and then I went totally whack job. And then, and I've been that way ever since.
Yeah.
And so my proudest performance was the decade of January 2000, right? From January 1st of 2000 to December 31st of 2009, I compounded at 13%.
Wow.
And
How'd you do
everyone
that?
else was bleeding. Well, it was gold and energy and right, it was all the right stuff.
Just staying in there,
and I
yeah.
thought I was smart. I thought and then all of a sudden, the beatings commenced, right?
Yeah.
It was time to throw the toaster over in the pool, and they did. And
Yeah.
so the last decade has been, for me, the lost decade, right? So since I don't short anymore, I would never short at this point. I was just on the side, a lot of cash. The equities, I kind of went down with the ship on.
Yep.
The gold, it felt like the ship was sinking, but then, it sort of flattened out at 1,200.
Yeah.
And if you can't go from 260 to 1,900, if you can't take a drop to 1,200, you're in the wrong business, right? So it felt bad, but then it stabilized. I bought some more, actually.
Good.
And everyone's raving about 300% gain or something in the S&P, and I'm sitting there on the sidelines, collecting 0.01% fixed income, and
But you feel safe.
well, except for the fact that the clock is ticking and time is the scariest variable, right? And and I'm not keeping up with inflation at these rates, and so
it's really
so
hard.
time is the variable that has always scared me. And a lot of people say, "Oh, it's your friend." It's not your friend if you're in the wrong position, right?
From conversations with his father growing up to his financial awakening in 1993, Collum's self-described dumb beginner's luck and outsider perspective have helped him find his particular perch in the financial world. For Real Vision, I'm Drew Bissett.